Greetings traders, this is Des here at Grok Trade on Tuesday, July 24th, 2012. Stocks drop yet again, Dow down 104 points, down 0.8%, the S&P down 0.9%, the Nasdaq down about the same, Russell's down 1.4%, the banks down just a fraction, banks doing better than they did yesterday, the VIX up 10%. Commodities doing fairly well, and crude oil up almost 0.5%, US dollar up 0.4%. And news today, we both had global stocks, including the euro tumbling, and large part had to do with the weak German data that came out, and not to mention the Moody's warning that also come out late day. Reports with a reiteration that the Fed is gearing up to make moves to do yet more stimulus. And let's see, oil up on China data, and the Europe concerns limit rise. All right, take a look here at the markets as a whole, at the rising wedge. Rising wedge now is confirmed. It is broken down. This is not good for the markets. We had support, support, support. It is now broken below that support line. This could get ugly and fast. I'm expecting a little bit of a bounce here before the sell-off, but I am more bearish in this market than bullish. A lot of people are looking at this as a head and shoulders. It's close. It is not. The reason it's not a head and shoulders is because we do have a higher swing high, shoulder, head. We do not have a lower shoulder. For this to be a head and shoulders, this needs to be our high, and then we need a lower step down. So a lower swing high. Also, we could call this a double top trend reversal pattern. The problem is textbooks will tell us that it needs to first clear this trough, this low, this swing low, needs to first get past that. However, in my book and what we teach our students is with this trend line coming higher, once that is broken, this is a confirmed double top trend reversal pattern to the downside. The question you have to ask yourself is, do you want to enter short after 3 days of drop? That could be a little extended to be adding shorts at this moment. If you count the numbers of days we have here, 1, 2, 3, 4, 5 going higher, and I'm even counting a red one here, only 3 coming down. It's only taken 3 bearish days to encompass the big run here. It took 5 candlesticks to go higher here. So it just shows a sentiment change taking place. If I take a look here at the weekly, we have the symmetrical triangle. We're at resistance. The weekly, we continue southbound. So we do have support coming up, but we need to have another brutal few days here. And there's a really good chance, gang, that we could get another 2 to 3 days of bearish activity here, and they could be gnarly. So something to be watching. Apple's coming out with earnings any moment now. This is a weekly chart on Apple. Death below the 20-day simple moving average. Be watching that. If I go to the daily here, you can see that we remain in this up channel. Very, very choppy here, but we're finding support at the 20-day moving average. If I go to a 1-minute chart, you'll see that we're hanging around the 600 to 601 mark. We just keep chopping around here with these violent moves, and we're just waiting for the earnings to come out, and you're going to see a gap one direction or the other. One that's been on our bull list for a while, Q Core. If I go to the daily here, we initially had a gap up. It came out with earnings, and you'll see we did have a gap up, but now it's since sold off. Look at this, down to 41. Go back to the daily, 41. Oh, so I had an initial pop, but as they were coming out with guidance, had a big drop. So this one is going to be under pressure starting tomorrow. For all you Grok graduates, be looking for the fading of a gap strategy and the 30-minute gap strategy. So you could have some nice plays on that, and I'd also do the same on Apple. All right, thank you for sharing this with a friend, and thank you for connecting with us in Facebook and Twitter. Take care and very safe trading to each and every one of you.